London AIM-listed Tower Resources is an oil and gas exploration company with a focus on sub-Saharan Africa. In the last few weeks, it's secured an 80% interest in prospective acreage offshore Namibia. And its shares recently ticked up on news as well, following the release of a reserves report on its Tali licence offshore Cameroon. Jeremy Asher is Chairman and Chief Executive of Tower Resources and joins us now. Jeremy, welcome.
Thank you.
First of all, sub-Saharan Africa, and you're an oil exploration company. Explain how life is at the moment.
Well, we have been an exploration company for the last decade, and I think we're well known, perhaps too well known, as an explorer. And we are still an explorer. That's why we've continued our long history in Namibia by taking on again a new set of blocks, which in fact include two of the blocks we had for a decade already, so we know them very well. But really, the core of the company now is appraisal and development in Cameroon. And I think that one of the difficulties that we have at the moment is that people still think of us as an exploration company and don't really understand that we now have a substantial appraisal and development asset with contingent resources, and that we're expecting to get to first oil pretty quickly.
Explain a bit more about that process and where you go from here in Cameroon, because we were talking just before, and you were saying then that that was your target, is production.
Yes, well, after we drilled the well with Repsol in Namibia in 2014, which was not commercial, we'd already begun thinking about different kinds of activities that could shift the risk profile. And we'd already begun negotiations in Cameroon over the Tali license. We finally completed those negotiations in the autumn of 2015. But by that time, the oil market was already heading downwards, and exploration and even production were regarded as dirty words for investors. So not a lot of noise was made about it. And what's more, for quite a while, we were working on how to take the license forward, so we didn't have a lot of news for investors either. What we found is that there's 18 million barrels of contingent resources that are readily accessible, and the only thing we really need to know about those resources is the reservoir performance, because Total never did a full drill stem test. So although they tested while drilling, and we have an idea, we know that the quality of the oil is 35-degree API, fairly light sweet, typical West African crude, we can't say for sure how it's going to flow and how it would respond to pumping or other means of lift. So the first thing we want to do now is drill another well into the reservoirs that Total had already tested, but test them properly with a drill stem test. And then we plan to drill 3 more wells in fairly short order, but after a good pause, so that we can bring a mobile production unit to the site and put all 4 wells into production and also do an extended well test.
What's the value then of this contingent oil that you've got, 18 million?
The 18 million barrels of contingent resources are evaluated by Oilfield International, who did our reserve report, at $118 million. And that's pre-development, so that's taking into account the full cost of putting in those wells and the platform, and then the value that you'll get out after repaying all that initial investment. So that 18 million barrels is in line with typical benchmarks for this kind of resource. And that's a good price to be aiming for, but it's just the beginning, because there's also deeper reservoirs that to the southern part of the structure, which Total's wells didn't intersect or test. And our plan would be that when we drill the additional producing wells aiming at the reservoirs that we already know, we'll also drill at least one of those deeper into the deeper reservoirs in the south, potential reservoirs, where there's another 20 million barrels of prospective resources. And if those are oil bearing as well, then we'll have a much larger development. But even those 18 million barrels should give us at 2,000 barrels a day per well, which is our base assumption, something like 8,000 barrels a day of production within a year or so.
Assuming you get the question about how you're going to lift it out of the ground in place and it's all satisfactory and the oil flows beautifully, when do you hope to be in production? When is the best case?
Well, the best case would be to actually get there by the end of 2019. I expect that if we don't achieve that, it'll be sometime in 2020. But we're drilling the first well in April, May of 2019, and we then need to have a pause because we'll need to have permitting and other negotiations with the government over the precise plan and the equipment that we plan to bring, and we'll need to get that equipment mobilized to the area. So it could be done by the end of the year, and if it takes longer, it takes longer, but I don't think it'll be that long because I think that the government will be as keen as we are to test that well and to see some more wells brought into the test.
I want to park the Cameroon asset to one side if I can and talk about Namibia, where I believe you've been since 2005, is that right?
We were one of the very first people in Namibia, and we had one of the very first offshore licenses after the Kudu in the south. So the blocks that we had and still have are in the northern area, the Walvis Bay area, and we think they're some of the most prospective. We chose those blocks originally because Norsk Hydro had drilled a well back in the last century, and that well had had oil shows in several zones. But what was apparent from the more recent seismic work that had been done was that that well had been drilled off structure, which is why there was nothing more than the shows. There are two potential areas to look at that are particularly interesting. One is in the immediate area of the old well with the oil shows, the Dolphin Graben. There's a number of smaller leads, but we can actually see the structures where the oil might be if it's there. And these are the same kind of things that Tullow were aiming for with their Cormorant well to the south. On the other side, further out towards the Atlantic, in the deeper water, originally we had, on the first set of blocks, we had 3 giant structures, which we called rather unimaginatively Alpha, Gamma, and Delta. And originally we were most interested in Gamma, but we switched focus to Delta, which was the most southerly of them, because of an unusual AVO anomaly over that structure. And that was where we drilled the Welwitschia well with Repsol some 9 years after we first obtained the license and started work in 2014. Well, that well was disappointing, and so we let that part of the acreage go. But what we've done is we've kept the blocks that incorporate both the 2 more northerly of the giant structures, which are the sort of things that companies like Exxon seem to be most interested in, again to the south. But we've also extended the amount of acreage we have closer to shore, covering that whole set of leads in the Dolphin Graben around the oil show well and more. So it's a very prospective area, but it is exploration, quite different from what we're doing in Cameroon, and I think it'll be another long, patient journey to actually get us to oil there.
Along the journey you've had during that period in Namibia, where you had that disappointment, of course, the share price has seen big declines. Of course, you've doubtless got shareholders on the books who've seen far higher share prices than we are at the moment. Let me just take a quick look at where we are in terms of the price we've seen. This is pretty much all of 2018 movement in shares. We're just off the highs that we saw back in May, currently 1.5 pence a share. You were talking about $118 million worth of value on the contingent oil of 18 million barrels in Cameroon. That gives you something a bit above your current market cap of some $6 million or $8 million dollars. Why is there such a big disparity, do you think, between the share price and the value of the oil in the ground in Cameroon?
Well, I think that there are 2 reasons. First of all, even in the best of circumstances, people usually don't give you the full benefit of the EMV 10 of even contingent resources, partly because they are wondering how you're going to finance it in our case, and also simply because they want to leave some value in hand for their own investment. Many people are looking for a higher than 10% return on capital at this stage. Now, the EMV10s are still very relevant because by the time you reach production, your cost of capital is much lower than it is at the beginning of the appraisal process. We'll put some equity into this development, but by the time we're moving forward with those next three wells and the platform and so forth, we'll have substantial debt capacity. So our cost of capital will be much lower. But right now, people are still viewing us as risk capital, and so they want to see a big uplift on their shares. But I think that that would normally account for our selling at a significant discount to the EMV10, but we're so much lower. I have a feeling that a lot of people actually haven't understood or haven't looked at the reserve report because they just don't think of us as what we're becoming, which is a production company.
That does cost money, as you say. Very briefly, just tell us exactly where the path goes through the question of how you're going to fund this well to the point of production next year in Cameroon. What is the proposal to investors about raising the money needed?
Well, the first well will cost between $10 and $15 million. $10 million probably be the dry hole cost, but then we're also going to test it and complete and so forth. Candidly, we don't have that money in the bank at the moment, but we have a number of options for financing it, and we'll do what's best for shareholders. We have industry interest in farming in, and that would be shall I say, the lazy man's way of doing it anyway.
You've got 80% to play with, haven't you?
100%.
Oh,
there's a back-in right of 25% once we're in production for the state oil company, but this is 100% owned and operated. Now, there are other options, though. First of all, obviously, we could just raise equity and drill the well ourselves. But we are also working on debt facility, and we have collateral in the contingent resources that gives us potential borrowing capacity even before we drill the third well, and a lot more after. So I think that, we may well come to investors for some money, but we have other options. We could do it without investor help, and the amount that we need to finance from investors does not necessarily have to be the whole amount of the well. So I think that I can understand why some investors may be concerned that there's a huge placing coming. I think that's a misplaced concern. The amount of money we need to raise is manageable, even if we were to decide to go down the equity route.
Yeah. One final question. Timeline from here onwards. What do you look to be the main points to watch out for?
Well, we've already taken quite a lot of steps on Cameroon. We've signed a letter of commitment on the rig, and we'll be announcing the final contract on the rig over the next 30 days or less when the contract's finalized. We've also retained Bedrock Drilling, who drilled the last two wells for New Age and Lukoil and Bolivin at Tinde, to provide the well management supervision services. We'll be announcing the service contracts as they're finalized, but they're well in hand. And we've also done quite a lot on early lead items, but we'll keep investors informed of the steps towards the well. We'll also make decisions about financing in the not too distant future. And again, when we have firm arrangements in place, whether for debt, equity, or anything else, of course we'll let the market know as soon as that happens.
Well, we look forward to hearing that when it happens. But in the meantime, Jeremy, thanks indeed for joining us here
Thank you.
at IG. That's Jeremy Asher. He's Chairman and Chief Executive of Tower Resources.
18 million